And since we are coming to the end of May, it's probably worth touching on some of the stocks that had started to find some momentum again. Technology, which had a big bounce off the lows as the shift away from tariff worst case scenario brought risk on back to the market. But today we've got a complicated piece to that story, which is a fresh outlook from Marvell Technology, a semiconductor company, and obviously there's been a lot of excitement around chip-related names, especially given the AI story of 2025. So we wanted to get some perspective from Dan Rohinton. He's a portfolio manager at IA Global Asset Management and one of our regular guests. Dan, it's great to see you. Happy Friday as well. It's kind of interesting to mix Marvell into the broader narrative around tech, since May overall ended up being this big month for the sector. First off, what did Marvell have to say? What's the worry from this outlook?
So what's interesting about Marvell is it's absolutely the number 3 player in the it's the number 2 player in the custom ASIC market, number 3 player in the GPU market as a whole. So it's not really about what Marvell says, it's about their customer intentions and how many customers they could bring on. So that's really the story. Valuation really adjusts based on those growth expectations. So this really was about Trainium 3 and Microsoft and any other hyperscalers that they may have brought on. So I would say that this is maybe the idiosyncratic conversation out of the broader AI theme, which has been pretty robust in the past quarter. So Marvell is in a league of its own, with its own idiosyncrasies, I would say.
And when I look at the Bloomberg terminal for how all of Wall Street views the stock, and analysts are never perfect in their analysis, but on average, they like this stock, and on average, they would not be surprised to see this stock higher in a year's time. And listening to what you're saying, I have to wonder: is it when you're trying to scale to deal with the demand? That sounds like a better problem to have to solve than sort of a complete collapse in sales potential for a business.
Yeah, no, this is quite the opposite. This is a debate around will data center sales, which have been growing about, I believe, 50 to 70% on a year-over-year basis, are they going to keep growing at such an exponential rate? So the valuation is actually discounted, largely reflecting the uncertainty associated with basically having one on your way to maybe 2 to 3 customers with one chip. So it's really single product risk and CapEx ramp debates that are being had at Amazon on whether they want to buy more NVIDIA GPUs, do they want to use their own silicone, which Marvell plays a role in. So it's very idiosyncratic to this company. So the numbers have been quite strong, but the valuation has a discount versus what it would normally be, largely reflecting the uncertainty associated with one customer on their way to 2 with very specific CapEx intentions, which you don't know. So it's that black box nature of the forward outlook that causes it to be as cheap as it is.
Okay, let's compare that story to another story, Costco, which came out with its quarterly results as well. Costco is one of these stocks that when you stretch it out over the last 10 or 15 years, it looks like one of the big tech stocks. It's had really rock solid performance. And, generally speaking, people like the fact that they've got that membership base, which makes them unique compared to some of the other retailers out there. But if memory serves, they've also got an expansion story to at least sort of point to with some of their efforts in China over the last couple of years. What did the company have to say with their quarterly results? And what's your general view on how the market is treating Costco right now?
Yeah, moving from uncertainty to supreme confidence, Costco is absolutely one of the best retail stories that are out there. That's why when they print 8% comps, ex gas, and some of the FX headwinds that they did have, this is your core marquee retail holding. The debate really is around valuation, which is approaching almost 60 times on a forward basis. So the market has high confidence in the algorithm for Costco, which is unit growth, taking market share, and increasingly tightening the pricing. The price increases for the membership windows from 5 years closer to 3, and maybe even a little tighter from there. So Costco is that consistent algorithm that the market has very high confidence in, which is why it trades at the extreme premium that it does.
It's just a super seller. I think they sell more than 1 billion rolls of toilet paper every year. And Dan, just in terms of the market mood right now, we had a great May, which was full of ups and downs if you were living through each daily swing. But I think there's a big question about if May, which is historically a weaker month, was a great month. What does the summer hold for investors? Broadly speaking, how are you approaching June, July, August?
Yeah, I think when you look towards the summer, normally the saying is sell in May and go away because the summer months tend to be tough for markets. You have to really go back to the empirical data to see if that's truly the case. But more than anything, what we really saw in May and the strength that is bleeding over to start the summer is still pretty robust, resilient markets that unwound some of the tariff-related noise that came in April. That being said, we're at a more normal valuation range now, and there are, we still haven't had the deals come through yet, and we don't know the landing zone. So that's really what I would be looking for in the summer is where do tariffs ultimately land? Do they end up in a completely benign place where the last few months in the grand scheme of things was nothing? Or do they end up in a 5, 10, 15% range on a broad cross-section of goods? Those details are really important because then that filters into the rest of the economy and affects the fundamentals of each of the companies, including a company like a Costco or a Marvell. So that's really what I'd be looking for is that extra information on where the landing zone is, because that'll dictate what I believe are broadly fairly valued markets today between moving higher or leaking lower. So it's really where that breaks. I'll look for more information on that.
Against that backdrop, we're going to take a break, but you've got a few names that have a pretty visible landing strip. So Dan will stick around with